If you are a breakout trader and you want to improve your success rate, the first thing which you need to do is enter as early as possible. In the movie Margin Call, the chairman gives a very good advice saying that there are three things which are important in the stock market, and the first advice which he gives is the best advice, and that advice is that be first. Be first to enter. Now, this is again a higher order skill. You need to develop this skill, but in order to develop this skill, first you need to have a good understanding of why you need to do that. And in order to understand that, what you need to do is Toby Crabble wrote a book many years ago about volatility contraction patterns or short-term patterns and trading short-term patterns, especially 3 to 5 days patterns. And there is a key paragraph in his book which is very important. And he says that in general, the earlier in a session the entry is taken, the better the chance for success. And the best entries are in the first 10 minutes. So if you're a breakout trader, if you can do entries early, the advantage is that immediately, if the entry is successful and the stock moves in your favor, then you can move the stop to break even very quickly and the trade is free. Now think about this. If you've been doing a breakout trading, what is your entry timing? Because the earlier the entry timing, lower is your stop, right? Now, how can you get early entry is something which you need to think about. One of the ways in which to get an early entry is to operate using a watch list. If you already have a watch list of stocks which are likely to break out, and then you're operating from that watch list, then it becomes very easy to enter early. But entering early is a big edge which you can develop. One of the reason why traders fail to enter early is they are looking for confirmation. They are looking for a confirmation volume. They are looking for a confirmation in terms of it should break this level. They are looking for a confirmation in terms of support or resistance. And by the time the stock makes that move, the stock many times would be up 4, 5, 6%. And as a result, you're entering and then your stop is wider. Because your stop is wider, the stock has to move much further for you to make money. So read these two paragraphs by Toby Crabble from his book, and they are very important. Entry within the first 10 minutes of the session is the key. I try and enter all my momentum burst setup in the first 10 or 15 minutes. The thing which he talks about is the more time that passes between open and trade, right? The more time it passes between open and trade, what happens is the lower the probability of success. Adjust the size of your position downward as the day goes on. So if you're entering late, then you need to put in less amount of capital into that trade. The worst entry is just before the close, when time is running out and it's difficult to realize a profit. The objective of this entry technique is to establish a position for 2 to 3 day run, but this is successful only if a substantial profit is realized by the end of the first session. So this entry being extremely critical is very important for those who are doing swing trading of 3 to 5 days. Obviously, if you're doing a position trading, your concerns are different and you should not pay attention to this. But I'm primarily talking to swing traders. One of the things which I see is swing traders complaining that they're not making money. And when I talk to them and look at their trades, their entry is late. Some even enter next day. A breakout trade, you enter next day based on what means like it's not going to work, because entering a breakout trade next day based on some recommendation of a newsletter or recommendation of somebody on Twitter, no, it's not going to work. These kind of swing trades needs to be entered very early. In order to enter in the first 10 or 15 minutes, you need to be organized to find these in the first 10 or 15 minutes. Your scans have to be organized to find these in first 10 or 15 minutes. The first 10 and 15 minutes, whenever you enter a trade, what tends to happen is that it immediately moves in your favor. If it moves in your favor, you can immediately move the stop. If you can move the stop to break even or sometimes break even plus, what happens is that the trade becomes free. I'll show you some examples of trades which I entered in this choppy market in the first few minutes. And that, so this mosaic trade, I entered this trade at 9:32. on this day within 2 minutes of an open, right? My scans are designed, or my watch list are designed to find stock opportunities like this. I took a trade here in PSX, okay, and I entered this trade in PSX because it was on my watch list in the first 2 minutes. So for the rest of the day, the stock went up, and you can literally move your stop to break even or break even plus. So these kind of entry techniques and the microscopic details of entries is what builds an edge. One of the reason why I always see traders entering late is because they are looking for volume confirmation. They are looking for relative volume confirmation. Now that invariably the volume comes in later. Whenever a stock breaks out, the volume is going to follow, right? Mosaic, by the end of the day, had higher volume. But if you waited for the volume confirmation, you would have bought it here. And now you don't know whether your trade is going to work or not work. So if you are a swing trader, especially in the 3 to 5 days category, I highly recommend that you read this Toby Crabel's paragraph and try and internalize the logic. And if you are especially buying breakouts late in the day, really think and see whether it is working. And if it is not working, rework your entry techniques. Entering early is an advantage. So take the advice from the chairman in margin call. Be first. Be first. And that's the best and smartest strategy in swing trading, especially if you're trading smaller time frames like 3 to 5 days or 8 to 20% in 3 to 5 days.